Good morning, Wall Street winners. It is Monday, June 17th, and we are about an hour and 20 minutes out from the start of trading today. If we look in our Bloomberg app at the futures, we can see that the Dow and S&P 500 are both slightly underwater, and the NASDAQ is slightly above and in the green. Looks like it's going to be a pretty muted trading week this week. This week we've got Wednesday, a trading holiday in the US for the Juneteenth holiday. So markets will be closed across the board on Wednesday in the US. And if we look down through our lists of stocks that we track today, there's just not a lot of news and probably not going to be a ton of movement this week. So if there's ever a week to kind of sit on the sidelines, maybe pick some stocks up or some add to your portfolio if you see a move to the downside that you think will correct in the coming weeks, this would be a week for that. You can see in the health and retail, not a lot going on here. And again, all of this is pre-market, so subject to change. Even the healthcare stocks, which, for example, Humana or HCA, tend to move $8 to $10 in the pre-market in swings that aren't necessarily reflected in that at the open, are only up or down. In this case, both up $1 and Cardinal down $2. So very little movement today. I think you're going to see a lot of people off, very little volume coming out this week. One stock I would keep my eyes on that did well Friday was JB Hunt. And when I say did well, it did well from the sense that if you watch this stock from the open through till about 11 o'clock, so if we take a look at JB Hunt here on the chart, you can see that it moved downwards for the first hour or so of trading, and then it found a bottom. And from that bottom, it started to make its way back up. So it was a great little acquisition there if you were to get in after it had bottomed out and just ride that back up. Didn't quite finish at where it opened at, but it got pretty close. And there was a nice tidy profit to be made there if you were willing to play the waiting game and if you believe that stock was coming back. And one of the ways to do that is if you go into JB Hunt and you look at the 5-day chart, you can see that when it drops off significantly in the day, starting really up in the 159 range and getting down into the 153, low mid 153 range, you just have to question what causes a stock on a single day with no news out to do that. And it's probably just volume, people dumping the stock for whatever reason, maybe a portfolio rebalancing that can drive that price down. And at that point, you then want to look at seeing if it's bottomed out and look to pick some up. And you're not always going to hit the bottom, but if you get close and it starts to make its way back like it did, then you can sell it at a nice percentage profit for the day. If we scroll down into the oil sector, oil is up. Crude is up today, the crude futures, slightly, 26 cents, but it's up in the high 78s. We really need to get this back into the low to mid 85s, but it has been coming back that way. If we look at crude over the last month, you'll see it was down as low as the really high 72s, low $73 range, and it's now creeping back up into the high 78s, hoping to really break that 80 threshold. If we can get it back up above 80, then I think you're going to see it really lift a lot of the oil stocks, which have come down from their highs, but have the ability to get back up there, especially as we move into more of the summer season with holidays and people driving and consuming more crude. As well, if we see businesses pick up, manufacturing pick up, that are also consumers of crude and crude for transport and things of that nature. So, we'll keep an eye on that. I'm still a huge fan of Valero, as I have been for all this year and a little bit longer. But there are some other good buys in here. The one that I would stay away from is Marathon with that announced purchase. That could be very limited in terms of what it can do. Cenovus down at 25 seems like a really good bet. If Exxon dropped into the low 100s, I'd say that would be a fantastic acquisition to add to your portfolio. And the other thing with these stocks that you have to remember is even if you buy them and they dip temporarily, if you go down to the financials key stats area, you'll see if they have a dividend. So Valero, as an example, pays $4.28 annually, which is a 2.85% dividend. So that's a really decent dividend. It's about half of what you would get in, say, a money market fund these days or a T-bill, but you have the upside of the capital appreciation. So if you do have to hold it and you're not borrowing to hold it using, say, margin or using debt of some kind, then you will get that 2.85% return over an annualized basis. If we go down into crude, another one you might want to hop on if it does dip a little bit is CrowdStrike. CrowdStrike, GoDaddy, and KKR are all being added to the S&P 500 at the end of this month. So we're going to see some rebalancing of funds that have to carry all of those stocks. So that's going to lead to the price of that continuing to rise. It has already risen significantly. I mean, it's up $50 from its after earnings price when it was announced it was going to get added to the S&P, and it was up, I think, $30 to $40 after earnings. So you're already looking at close to an $80 to $90 move in this stock in a very short period of time. If we look at the 1 month, you can see that it was down at 304. It's now up at 385. So do the math on that, and that's how much it's increased. If we take a look at others, Apple continues to have a strong buzz about it. You never want to fight a trend. So the one thing to remember is if a stock is moving and there's momentum with that stock, don't try to fight the momentum. It's like catching a falling knife. You're going to cut yourself, you're going to bleed and lose money. So just follow the trend and get on there and be one of the other boats in the ocean that rises when the tide rises. So Apple's one of those examples where the tide seems to be rising. If you get in, you'll probably make some money on that. Just be wary that it could come back and correct at some point. So take your profits when you have them and then get out and get back in and get on that tide again, but maybe in a different stock. Coming down further, not a ton going on, although we do see some early market movement in some of the semiconductors. So ARM, again, up $4. This is a stock that's going to be in the 160 range if it opens up $4 today. And I can't believe it's not in the 110 range. So again, I'm not fighting the momentum. I just have a hard time believing it here, and I have missed the boat on this one. I've done very well on ARM this year, but I have not been involved in it in the last 30-ish to maybe 45 days, and it is just really rocket shipped upwards. I think going a couple months ago down at maybe a low of in the high 90s, and now we're up in the 160s. So that's just an incredible move, and I can't see it being justified with earnings going forward, but that's just my perspective. If we move down further, Shopify has done well on Friday and is closing in on that 100 mark of stock price. AMD at 59, still staying away from AMD right now. Qualcomm has been hitting it out of the park. This is a stock that a couple of years ago just got beaten to a pulp and was down in the low hundreds. It's now kind of doubled from that point. We get down to Lam Research, it's up slightly. I think a good stock to look at here that I would feel is value priced is Workday. Workday is down at 209. It's a stock that has done historically very well. Over the last month, it got hit with earnings, so it dropped from the 260s down to the low 200s. If you take a look at this over 6 months, it's taken a couple hits on earnings. I think the next earnings cycle, it will turn the tide. So you can see here over the 1 year, it's really down back where it was a year ago, and it's lost all of those gains over the year. So this is another great example of why I don't like to buy and hold stocks. If you were to have bought and held this from October of last year through to now, you'd be back where you were with no gain, even though at one point you would have been up, say, $100 per share. You would have realized none of that. Now, your advisor would have got their fees out of that, but you would have received nothing from that. So I like to sell when the time is right when I've made the kind of profit that I'm looking to have made, and when I feel that the momentum may come out of that stock or things may be changing. And it's hard to predict, but there are always opportunities for new stocks to get into. And I think right now, Workday is a tremendous value, and it will likely get back up into at least the mid 200s, if not the 300s and mid 300s within the next year, because it's a strong software as a service software company. It has a lot of ARR, which is annual recurring revenue, and it's growing that annual recurring revenue in its customer base, and it's generating cash flow when it does that. So another very successful company. Broadcom is up $60. So again, it had great earnings last week. It seems to be moving, continually propelled forward on those good earnings. It's incredible that it's up $60 pre-market, but it was up $215, $220 after it announced last week. So it's definitely going on a bit of a tear here, not unlike NVIDIA. We scroll down further. We saw Tesla had a bad day Friday, but a good week last week. Meta in the low 500s, I think is it's attractive. I would wait to see if it pulls back into the 490s again. BABA has been falling from its earnings in the mid 85s down to the low 70s. This could be an interesting acquisition if you're willing to hold it for about a year. Still a lot of challenges over in China in the economy, but they seem to be on a really strong footing as a company. And as long as that continues, they've made some significant changes within the company to improve things even further. And I think they're going to come out ahead and certainly grab some market share. And they're going to divest of other companies that aren't strategic to their holding company portfolio once the market turns around and gets better, and they can get some value out of those. Google being off this morning, interesting here. I love Google. I would certainly buy this if it dropped $1 or $2 today, and then wait for that to recover. I think it's found a bit of an envelope if you look at the 1 month here, and really just the last week or so, back to early June, where in early June it dropped down into the 175 range. It's kind of peaked up here at the 181 range. So that's kind of your envelope right now, and it's in this, call it boring little envelope quadrant. But if it drops down like it did here to 176, the high 176s, it's likely going to come back up into the 178, 179 range. And at some point, as we come into the next earnings cycle in July, it's definitely going to continue its upward trend because it has some serious positive fundamentals and a great future forecast story behind it. Adobe had great results last week. We can see it was up $66 on Friday. It's likely to continue that forward momentum as well. So that's a stock that you could jump in on and ride that tide concept. And then there's some of the financials, and these have started to sell off. They're also typically the first to announce at earnings week or when the next earnings cycle starts, which is in mid to late July. So we will see some of these start to announce then. JP Morgan in the low 190s, I think, is a steal. If we see Raymond James drop down a little bit lower into the high 100s as opposed to the 115 range, I think that would be a good acquisition. I think you're going to see M&T pull back into the 130s. If it dropped into the 135s, I would pick some of that up. Morgan Stanley, if it drops down to the 92, 93 range. And then Goldman last week on Friday dropped down to the 440s. I picked some up and got out in the 445 range. So that was a nice little pop there after the morning dip. So I'm looking at that one as well to see what kind of moves that it's making. And then SoFi had a horrific day on Friday after a pretty decent week, really. If we look at the 5-day, it got up into the mid 730s on Wednesday, and then it just fell off the charts on Thursday and Friday. So this is a stock that went from 740 down to 640, a dollar swing in that stock, almost 8% in a week. That is just incredible for movement in a fintech financial services stock. I think it is absolutely deep discounted right now at 646. I bought a bunch of this on Friday, waiting for it to recover to the 720, 740 range, where I would look at potentially selling that and taking a profit on that. So that's where we are today. Good luck with your trades. If you're liking these videos, please subscribe to the channel and leave me a like and a comment.